Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hey everybody, here we are as we turning the page to another month here, just about in the calendar summer of the year 2025. Headlines still coming fast and furious out there. You know, Jeff, I never did see any of the Fast and Furious movies, but anyway,
I didn't either.
I don't want to digress too far on this, but you know, something that you've been talking about lately and writing about, and for those of you interested, if you're watching this but you want a written version, go on our website, www.wisdomtree.com, and look for Minds on the Markets. But Jeff, something you've been talking about here is, you know, going back in time a little bit, making some comparisons or looking at the year 2021. What do you mean by that?
Yeah, and that is critical because it's kind of popping up here in the last week or two. There's been a lot of those parallels because where we were psychologically as a stock market or as a society was, remember, we were hitting those brutal lows on April 8th, and then 3-4 months pass and you say, oh, is this the beginning of an uptrend? And then you kind of get deep into summer and you start saying, well, is this now a speculative mania? And that's really been in the discourse for maybe 10 days or so. There's been a lot of these meme stocks popping up. New names. It's not GameStop and AMC. Or maybe it is. I don't know. We don't really pay attention to those types of things here at Wisdom Tree. But there are now 5 or 10 of these speculative companies that are creeping into the conversation. And it makes you worry. You know, the S&P in 2022, the S&P went down 18%. The NASDAQ went down 30%. And that was after 2 famous years in 2020 and 2021. And you start seeing speculative meme stocks, these dollar stocks, these $2 stocks doing a double, a triple, a quadruple really quickly. And you start scratching your head a little bit, Kevin.
You know, what's interesting is that when you're looking at parallels, one of them obviously is inflation, or perhaps the beginnings of. We had the COVID supply disruptions back in 2021. Now we're talking about potential tariff-induced inflation here. How's that playing out?
Well, the key here, Kevin, is you said potential, which means it could or could not happen. I mean, it's no slam dunk that we're going to get that. And remember, tariffs should theoretically be fiscally restrictive. That's anti-inflationary. And if you go back into these cycles, think about it. I always remember these dates that the stock market reaches bottoms and tops because we talk about them so much. It was January 3rd, 2022, which was the peak in the market. And essentially, if you go back, I'm talking to the Fed criminologist here. You've got it memorized. Think about what the Fed was doing in calendar 22. They gave us something like 400 or 450 basis points worth of hikes. And so you say, oh, okay, well, you had the speculative mania, the meme stocks, the NFTs, the SPACs, all of that stuff from 2021. And then surprise, surprise, Jay Powell hikes by 400 some odd basis points in 22, and the bear market starts growling. And I think that that's something we can find a little bit of solace in the here and now, because look, they're kind of on this pause, but we're going to maybe get a September meeting here where we get 25 basis points worth of easing or what have you. But nobody's really predicting anything on the hiking side from the Fed. So I think that's something that could be an area where we find a little bit of a wiping of our eyebrow in the back part of this year.
Well, I mean, I think that's an important distinction, right, when we're talking about monetary policy. And I think the other interesting part of this, and you hear more commentary about it, matter of fact, Fed Governor Waller, who is, being a Fed governor, a permanent voting member on the FOMC, talking about tariffs not necessarily as being inflationary, but a tax. And what's interesting, if you actually look at how the government categorizes tariffs on the budget statement, it's customs and duties, which does underscore the point it is a tax, and you wonder if it's just a one-time thing. So, Jeff, I'm going to throw it out there.
Yeah.
Tariff-induced inflation, is it T-word? Is it just transitory? Is it something to worry about?
Okay, now remember, you and I were both very good. We pretty much nailed all the COVID inflation going up and going down. And I think that we should stay on this disinflationary concept. As we've pointed out, you have a headline inflation number of 2.7% in this country right now. Real-time, real-world inflation is something materially lower. Reason being because rent and owner's equivalent rent are still playing catch up. As we've talked in the past, you now have a situation where, maybe the first digit on real world inflation is a 1. The economy's kind of in this ho-hum, neither hot, neither cold situation. So I think any prognostications of runaway inflation are probably a little stretched right now. I certainly wouldn't be on that trade.
Yeah, same here. Well, I think that's going to do it for this week's episode. Thank you, Mr. Weniger, for your comments. Always appreciated. Once again, tell all your friends, tell all the people, if you're watching us now and you like us, to come back. We'll see you in about 2 weeks. Enjoy the rest of the summer.